Hi, my name is Ben, and I'm the former CEO of a debt settlement firm. Today, I wanted to give you an inside view of what debt settlement is, the costs, the lawsuits that can happen, credit score impact, and red flags that you need to look out for. The video is full of information that other firms may not want you to know, but you really do need to know to make the most informed decision. Let's get started. Welcome to Ascend Finance's YouTube channel, where we take complex terms such as debt settlement and simplify them into simple, human understandable language. To personalize your situation, we also built a free debt settlement calculator that we include in the description that provides the cost, duration, allows you to compare all your options in order to make the most informed decision. I was the previous CEO of a debt settlement firm, and debt settlement can be a great option for those who face financial hardship. That said, there's a lot of debt settlement companies that won't tell you things that you need to know. And I think it's super important to kind of understand those before getting started. It can be the difference between a successful settlement and a lawsuit against you. Here's what we're going to cover in this video. First, what is debt settlement? Second, an example of a story with Jessica, who went through debt settlement. Third, the debt settlement process. Fourth, the debt settlement cost. Fifth, debt settlement pros and cons. And sixth, debt settlement company red flags that you really need to look out for. Now, you're probably looking at this list and saying, how am I going to get through all this content? The last thing I would like to do is listen to myself speak for 10 minutes. So we added chapters below so you can skip through to the content that's most relevant for you. Before we begin, I also want to know that your situation is unique. So my goal is to answer all your questions related to debt settlement, but if I don't, I'd ask that you just please comment below and I'll get back to you as soon as possible. Also, if this information is helpful, I'd love for you to click the little thumbs up at the bottom or subscribe to if you want to see other videos that are helping you get out of debt cheaper, easier, and faster. It also is really motivating and encouraging to me. Let's go ahead and jump right in. What is debt settlement? Before we do anything else, we really need to define what debt settlement is. Debt settlement is when you try to reduce the amount of your debt from one payment to the other. On a small scale, you can think of it as someone, you owe them $1,500 and then you decide that you can't pay that and you negotiate that for, let's say, $500. Typically, either a professional or a company can help you negotiate these into a lower payment that depends on your unique circumstance. Debt settlement is an option for those who can no longer pay their debt. It is a financial relief situation, so you need to consider that before you start. The types of debt that you can negotiate generally are those that are not secured by any sort of collateral, such as a car or home. So you can think of these as credit cards, medical bills, utility bills, potentially other debts as well, like maybe a car note that you return in a voluntary repossession. The important thing to understand is that these types of debts are unsecured. So these are types that you wouldn't lose your house or car if you didn't pay them back. Things that aren't considered unsecured debt would be car loans and house mortgages. If you were to not pay on your car loan, your car would probably be repossessed and the debt as debt secured by that collateral. Keep in mind that when you evaluate debt settlement, you should look at how much debt you have that is unsecured. So with that in mind, let's take a look at someone I worked with recently, who we call Jessica, who is enrolled in a debt settlement company. Her real name is not Jessica, but for the purpose of this video, I'd like to illustrate just the importance of knowing your options and comparing those and understanding debt settlement specifically for your situation. So Jessica was enrolled in a debt settlement program that had high fees and did not prioritize the accounts based on the lawsuit likelihood. We will chat about lawsuit likelihood and red flags later in this video, so stay tuned until the end to get the most information. So Jessica was in the program for about a year when she got sued by Discover. The problem was that the debt settlement company did not have funds available in her escrow account to settle the account. So in this case, the account can go into a default judgment that could later result in something such as a wage garnishment. Jessica took our free debt settlement calculator and we were able to find a customized solution with a debt settlement company that charged less fees and was able to help her much more effectively. So looking at this example, what could Jessica could have done? First, Jessica could have found a debt settlement company that prioritizes lawsuit likelihood accounts and have lower fees that could save her thousands in the long run. Debt settlement companies often know who are going to sue and who are not going to sue, so it's imperative that the debt settlement prioritize those accounts and settle those accounts first. Now, unfortunately, Jessica's story is not by itself. It's not alone. I have heard so many stories of people who qualify for Chapter 7 bankruptcy who get pushed into debt settlement, and other stories where folks get a mailer about a debt consolidation loan only to find out it's not a debt consolidation loan that they qualify, but they do qualify for a debt consolidation program. These two are definitely not the same, so we'll cover some of those additional red flags that you need to look for in debt settlement companies later on in this video. Okay, now that we discussed that what it's good to understand, let's talk about the cost and duration next. And the process. So first, let's cover the debt settlement process. The debt settlement process can be a little frightening. As soon as you begin working with the debt settlement company, you'll be advised to stop making payments to your creditors. This will basically push your accounts to be behind. The creditors won't settle generally for a lower payment without the accounts being behind. So the accounts are behind. While you're not making payments to the creditors, most debt settlement companies will have you put money into an escrow bank account to hold that money that will eventually be offered to your credit card creditors. Even if there are multiple creditors, you still only have to put money into one account. This is how debt settlement can be compared to debt consolidation, where you take many creditors and you consolidate that into one account. In the meantime, the debt settlement company will act as a go-between between you and the creditors. This can mean that collection calls will stop to you and they will go to the debt settlement company. This can be a relief to those that are getting 20, 30, 40 calls a day. After a time, the debt settlement company will make sure you have enough money and start settling the debts one by one. If you're not happy with the cost or the debt settlement amount, the debt settlement can try to negotiate for a lower amount. One thing to consider about the amounts is that you get to decide what you choose. You should never have a debt settlement company that tries to force you into a debt settlement just because they want to get their fees. Once both parties agree, the debt settlement company will release your payment to creditors and the account will be considered settled. The entire process of settling one account can start and can take between 3 to 4 months just to get started. Keep in mind that you do not have to use a debt settlement company to settle your debts, but many people decide to do that because of various pros and cons to using a debt settlement company. Okay, now let's cover the debt settlement costs. There are a few costs that are associated with debt settlement, but one of the biggest you should watch out for is the debt settlement company cost. Most debt settlement companies do not charge their fee until the first account is settled. This was a part of some legislation that happened many years ago where debt settlement companies were not settling the accounts, but charging their fees. Make sure that the debt settlement company does not charge fees until they first settle their account. There are two main fees that you're going to be associated with debt settlement. One is a monthly escrow bank account fee that can cost between $7 and $15. Next, the debt settlement company fees that range between 15 and 25% of your enrolled debt amount. 25% and 15% are huge differences that can relate to thousands of dollars in fees. Make sure you understand what the fees are before you sign the dotted line. Many debt settlement companies will not be completely transparent about the fees until you get the client services agreement, but it's imperative that you know and understand how much it costs. Now, the debt settlement companies do a lot of work, so it makes sense that their fees are high, but you need to understand how much they are and what you're actually paying. Now that we covered that, let's cover the pros and cons of debt settlement. Let's start with the pros. First, consider the savings. This is probably the most important pro of debt settlement. Even with the various fees you pay, you could still save a substantial amount of money. Let's say you have a $10,000 debt and the debt settlement company settled that for $5,000. You pay a fee of $1,500 to the debt settlement company. You're looking at about 35% fee reduction on that. Now, there are other fees associated or there's other costs, but you can save money doing debt settlement, and that's one thing to be aware of. Second is payment flexibility. With Chapter 13 bankruptcy, you don't generally have as much flexibility with how much you pay each month. In debt settlement, if you need to have a break for Christmas or some other event, you can usually stop making a payment as long as you're for a month or two, as long as you're not within a debt settlement structured debt settlement that's over time. The next pro is the amount of time it can take. Now, if you're above median at Chapter 13 bankruptcy, it's going to probably last 5 years. But in debt settlement, you can actually be out of debt within 24, 36, maybe even 48 months and really save money and get out of debt faster. Finally, going through a debt settlement program can keep you from filing bankruptcy. Now, bankruptcy can be a great option for some people, but some people want to avoid it. And bankruptcy and debt settlement allows you to do that. And it doesn't have the public record of the bankruptcy filing like bankruptcy does. Next, we're going to cover some of the cons of debt settlement. First, let's cover the lawsuit likelihood. Now, lawsuits can happen in debt settlement, and it really depends on what your creditors are. One of the things that our debt settlement calculator does in our debt settlement insights is to show you the percentage chance of what we think, it shows you which creditors we believe are, based on a lot of data, who is more likely to do a lawsuit. And that's super important for you to understand before you sign the dotted line. Second, there is credit score impact on your credit report. As I said before, your accounts go behind, and that is when creditors are more likely to settle the accounts. Let's just say that your credit report and credit score are impacted, so it's really important to understand what that looks like for your situation. We're going to cover that in another article about how your credit score is impacted and your credit report is impacted. Both of these are super imperative to just understanding whether debt settlement is the right option for you. So as I said before, make sure to work with a debt settlement company that prioritizes your accounts based on likely lawsuit. Another con is the late fees and interest that could accrue before they settle the debts. Now, after missing months of payments, those payments do accrue, and it doesn't generally increase that much, but it is a con to consider and something to reason. It might be 5% more than what your current balance is, just something to consider. Another con to consider is the potential tax burden that you'll have by your debts being forgiven. Once you reach a debt settlement with your creditors, you may have, the creditor may report that there was a forgiven amount, or if it's over $600 in the form of a 1099-C. Now, just to be aware that not everyone may be responsible for that tax as long as you are what's called tax insolvent. And there's requirements related to the tax insolvency, but it's important to understand what that is. So I'll include a link in the description below that helps you gauge whether you are tax solvent or not, at least estimate. Being tax insolvent means that you have more liability than your assets in your estate. If this is true and your liabilities are higher than your assets, then you may not have to pay any taxes for the forgiven debt. On the other hand, if you have more assets than liabilities, you may be responsible to pay income taxes on the forgiven debt. The one final con that I want to tell you about is that debt settlement may be more expensive than any other form than other forms of debt settlement or debt repayment, such as Chapter 7 bankruptcy. It can be much cheaper than Chapter 13 bankruptcies, but it's really important to understand those. And our debt settlement calculator actually helps you compare the cost between debt settlement, Chapter 7, Chapter 13 bankruptcy, debt management, and debt payoff planning. Now that we've covered the pros and cons, let's now cover the red flags that you need to look out for in a debt settlement company. The first one is that the debt settlement doesn't do a full analysis of all your options. This is basically this example of a debt settlement company saying you really, really need to do debt settlement and doesn't do a full analysis of your different options, such as Chapter 7 bankruptcy or Chapter 13 bankruptcy. The second red flag to look out for is having amazing reviews on biased review sites. Not many people know that some debt settlement companies and other companies pay to be ranked in a review site, and then that company has ads on they put ads on those review sites, so it makes it look like it's a review site, but they're paying to get those clicks. So just that's something to be aware of. We like Google reviews and Yelp reviews tend to be, I believe, less biased. Another thing is pushy sales tactics. You may be in a situation where you're facing a financial hardship, and the last thing you need to do is to be pushed into something. What may be helpful is to know all your different options and make the most informed decision once you have all the information available. Next is upfront fees. This is a big no-no in the debt settlement space. So if they're charging you a bunch of upfront fees, you may want to look elsewhere. The other thing that we see a lot is pushing debt settlement as a backup to a debt consolidation loan. So we see this a lot where a debt settlement company will send out a letter that looks like you're going to be trying to qualify for a debt consolidation loan, but then no one ever qualifies, and they always qualify for the debt consolidation program. This is a little bit odd and suspicious and something to look out for. The other thing to look out for is a debt settlement company that only mentions positive outcomes. There are some negative cons that could happen, and it's important to understand all of those. So if they're only saying how much you're gonna save and how great this program and how peace of mind you're always gonna have, then it's something to look out for too. The next thing that is a red flag to look out for is being unclear about your potential savings. So are they including potential tax implications? Are they including like the fees, the higher fees? Debt settlement can be a great option, but it's important to know all of the things that are going to happen before you enroll so that you don't have any surprises. The other thing that's important, that probably be one of the last ones, is to enroll you even though your lawsuit likelihood is very high. Now, sometimes you might have a portfolio of creditors that's really high, and our debt settlement insights from our debt settlement calculator can really help, but we really want you to kind of understand what those options are and what the chances of you having a lawsuit are. Debt settlement companies have troves of data, so they should really know who's going to sue you and who might not sue you before. Make sure you're keeping an eye out of with these red flags and researching when you're researching and talking to debt settlement companies. The last question is, should you do debt settlement? Deciding whether to pursue debt settlement is ultimately your decision, and your situation is completely unique. Please add a comment below if you have any questions, or take our debt settlement calculator to get a unique insights about the cost and duration about your specific situation and compare alternatives. Thanks for watching, and if you like this video, I'd definitely like you clicking on the little thumbs up button at the bottom. And if you want other ideas about debt settlement or any other videos about getting out of debt cheaper, easier, and faster, feel free to subscribe, as we really appreciate it and we want to make the most unbiased information out there available to you.